Hello everyone, welcome to another episode of The Tech Stack. Thank you so much for joining us wherever you are today. You may have been hearing recently about non-fungible tokens, NFTs or Niftys as they're called. The big talk in recent weeks has been Christie's $69 million sale of a piece of digital art from the artist Beeple. But what exactly is an NFT and what's their place in the future of financial services? Well, that's what we're going to dig into a little deeper in this episode. And really pleased to have Alex Batlin join us today, founder and CEO of Trustology. Alex, welcome.
Hi, absolute pleasure to be on this event. Thank you so much for having me.
Well, pleasure to have you here as well. Could you give our audience a little background into Trustology, please?
For sure, be a pleasure. So Trustology is a custodian wallet provider. So we provide custodial services for anyone who wishes to interact with crypto. We have folks like service providers and brokers and exchanges using us for kind of managing their deposits, withdrawals, and settlement. We have folks like funds who use us for arbitrating on exchange and on chain, or actually increasingly the number of DeFi funds who are doing yield, including NFTs. And then we have token issuers as well as their high net worth individuals. So very much focused on organizations, businesses, and serving institutional needs.
Well, it's a world that's certainly exploded recently. I can imagine you guys are only going to get busier and busier as the world of DeFi takes off even more and becomes more widely adopted.
Indeed, yeah, it's been fun few months.
I can imagine. I know you've long been involved in the blockchain space from a business and technical standpoint for a long time. We're going to dive into NFTs in a moment. As we say, they are something that's hit the mainstream news in the last couple of weeks or so. But I think it's really important that we give people a bit of education onto what an NFT is. Again, I mentioned there's a couple of words as well. People are using Niftys or non-fungible tokens as the official term. I think we're all doing our best to get our head around them and their place. So could you outline exactly what an NFT is for us, please?
For sure. So non-fungible token, which is what it stands for, it means it's a record on a decentralized database blockchain that records, essentially think of it as a form of title deed to something recorded on blockchain and owned by whoever holds the private keys, which is the bit we custody, and holds therefore the right to that title deed. So in principle, in a very abstract way, that's all it is. In the end, it's a database record, in this case, a decentralized database that records a form of ownership over some asset. Now, those assets could be very, very diverse in their nature. Some assets could be, for instance, digital art, or music, or video clip. Now, that video clip can be stored anywhere in the world. There's a bunch of now decentralized storage services like IPFS. So the key to understanding, for instance, art and music and so on, you're not necessarily getting exclusive access, but you have ownership rights over that asset. Why is that important? Well, some people just like collecting things, and therefore they can say, I own the right to that particular piece of work. Slightly more financially savvy people might want to also have the licensing rights, because if you own a piece of music or a piece of art, you might then want to borrow land, use it as collateral, or actually collect royalties kind of off the back of that. So let's say you wrote a book. The book can become an NFT, and every purchase of that NFT item can also be monetized through royalties that feed into the non-fungible tokens. So you can have purely digital assets, which is what the NFT represents. The NFTs can also represent physical assets. Think about the art, So for instance, one of the key value drivers for art is provenance. If you know who's owned a piece of art, physical piece of art, and the provenance of the sales, it can make the difference between, very expensive and not so expensive piece of art. So having a really good record of provenance makes a big difference. So you can either kind of represent purely digital assets or purely physical assets. And then, of course, people are talking about real estate and so on. So, in the end, why can't we represent real estate as a token? Today, some countries have centralized registries like UK to represent property. Other countries don't necessarily have that, but in the future, it's longer kind of anticipated that a lot of those high value title deeds will move on to blockchain as a record, because it's global in nature. And as we get more global and people buy things globally, being able to look something up on a global database that's not controlled by a single entity is extremely valuable. In fact, there is, Ukraine was one of the first countries that started to look at tokenizing their assets because they were worried about invasion. And then apparently, statistically, whenever a country is invaded, the first thing that happens is their real estate records are deleted. So it's very difficult to then get back who really owns the land post-invasion. If those records are stored globally in a ledger that cannot be just simply wiped off, that's actually a massive benefit. So, whole range of different use cases for NFTs. So think of NFT as a technology standard that allows you, and really a record in a decentralized database that represents anything from digital rights to digital creations, artwork, music, whatever, through to physical assets, through to actually kind of legal agreements. Yeah, if you think about a contract, a loan contract, or like an Easter agreement, if you're doing trading, then all of those are unique contracts. They're non-fungible and therefore can be represented as a non-fungible token.
So you've offered up a lot of examples there. I think there's plenty people can relate to. And the big thing that sort of struck for me there is that ultimately these are just a record. So is the concept actually nothing new, but it's just being enabled and driven now by modern blockchain technology?
I think the concept of representing something in agreement or whatever has been around for a very long time. The the innovation in some ways is the fact that there is no single central entity that controls that, which means that, of course, it's a much more secure system. Think about any registry that's centralized. Well, if it disappears, that's it, your records are gone. Perfect example, for instance, was Lehman's. The Turkish authorities had no access post the the crash of Lehman's, because all the records were stored in London. So having a global database that cannot be easily manipulated by any one entity provides a lot more assurance to everyone that the records stored there are going to be well kept and safeguarded. So I think that's probably a massive benefit. Then the other thing that's worth noting is that this kind of creation of what I'll call probably the largest global ecosystem of highly integrated financial services, otherwise known as DeFi. And that's also now kind of becoming really, really important. Why? Because all of a sudden, with the same set of credentials, your private key, within minutes, I can create an NFT token at a much cheaper price than any other database you could have created. I can then use that NFT as collateral to take a loan out. Once I've taken a loan out, I can go ahead and, for instance, long or short assets. I can buy insurance with something like Nexus Mutual to protect that. All of that done in minutes without having to onboard with each and every service provider, potentially separately, and a fraction of the cost. So nowadays, the utility of assets issues on a kind of blockchain as an NFT is vastly improved, because out of the box, you get hundreds and soon thousands of financial services that you can access within minutes with very low friction. And I think it's that ecosystem that's going to make the massive difference going forward, and why people will continually choose to kind of issue them as NFTs because that ecosystem of capabilities, financial capabilities.
It opens up wider thoughts as well about blockchain tech as a whole, doesn't it? Because people often compare it to a next generation of the internet, and you say all those services are there. I guess at the moment it's still quite young though, and particularly maybe on the NFT side. So how do we start to get people to adopt these services and really make them more mainstream than they currently are?
Absolutely. I think, first of all, the concepts are pretty new and radical because we're effectively unbundling banking. Yeah. The banking used to be bundling up safeguarding, access to payment rails, and also yield generation all in one package, which is great, but it doesn't give you much kind of flexibility, and you can't choose best of breed, and you're limited to the amount of yield you can generate. On blockchain, we're seeing this unbundling. We effectively, as a custodian, help people to safeguard their assets and transact them safely. So holding them or transacting safely. But what we're not doing is introducing counterparty risk by taking deposits and effectively kind of adding a risk to holding with us. So the conventional wisdom would be like, oh, great. So you can only hold money with a custodian, but if you want to earn yield, you have to move it somewhere else. The beautiful thing with kind of this model, the crypto model, so you don't have to choose that because you can still keep the keys with us and have all the protection of the kind of custodian, but you can earn yield from, literally now probably hundreds of different DeFi protocols. And those yields can be kind of anything from lending yields to automated market making yields to other protocols. So you can have a wide choice of investment opportunities effectively to generate yield to suit your particular risk profile and kind of lockup periods. So just a huge amount. It's like open financial architecture. It just opens up a lot of opportunities. But to make it kind of accessible, some people are really, really technical and they find it relatively easy to navigate. I think others who are newer to the industry will find it a little bit harder to navigate. So they do tend to then gravitate towards custodians because we provide effectively a more kind of Web 2.0, as people call it, more traditional kind of interface. So we look a bit more like your bank account, and you can see balances and transactions. That if you lose your private keys, we'll be able to restore them because we keep the real custody keys and so on. And then we also kind of provide a lot of transactional advice. So not in terms of investment, but in terms of security. So we can say, look, this transaction is likely to be risky because this protocol might be risky and so on. So, and then we all add additional capabilities like blocking certain transactions and so on. So I think bringing those capabilities will kind of reduce the risk because we provide both a more familiar user experience and a much less risky user experience. So I think that's one way, but we are really targeting more businesses, because it's hard to do custody, but it's even harder to do custody for organizations versus individuals. Because as soon as you've got an organization managing assets, you have to worry about who do you share your keys with, because you can't unshare keys. So you need to have all the various different access controls and transaction permissions to do that. As an individual, it's a simpler use kind of case. But there are plenty of really good projects that are targeting individuals to make them to make the user experience easier. So we're seeing a lot of people wrapping DeFi protocols with very simple user experiences. Create a wallet, they effectively wrap the exchange of fiat to crypto automatically, and then you generate yield by essentially the service provider under the hood placing funds into a yield-bearing Aave account. But then user just sees it like a normal deposit account. under the hood, all that mechanism is very, very different. So I think we're seeing a number of different angles, providers like us making it easy for organizations to access this space and manage liquidity and treasury through the kind of more organizationally focused tools. And then we're seeing retail solutions coming on board, simplifying this. And because blockchain is inherently a platform with every aspect of it available as a programmable interface, it makes it really easy to create plug and play bunch of services together and put a nice user interface that's specific to a particular user audience.
Yeah, that then becomes very appealing to some large investments, doesn't it? And we've seen the big banks start to play around with crypto over the last year or so. And presumably on the NFT side, if we look at the example of Beeple's art sale, that will have caught the attention of a lot of investment managers and hedge funds. So are we expecting to see these as a real large investment institutionally, or is that already happening because of the potential that they can see?
I think we're seeing a pickup on this. There's the first wave of NFTs was a few years ago with CryptoKitties. A lot of people talked about it. Then it kind of died down and is back again. Actually, if anything, I predict the NFTs for financial contracts will massively outstrip NFTs for art in the future, because that's a very natural fit. It doesn't mean that art and other kind of assets are not going to be represented. But I think, if you look at art as a one-off piece, exciting, but there's a much bigger market share for NFTing, for instance, rights to books, music, video, and so on. So I think actually the problem right now is that the cost of transacting on blockchain is such that it's really prohibitive to sell a book for £5 or an NFT for a book for £5 because the transaction fees on the network are just so expensive. But we're starting to see, for instance, solutions like led to optimism coming on board, which massively decreases the cost of transactions and also gives us much higher throughput and lower latency. Between all those things, I think the much bigger prize is your music, your books, your videos, being able to finally buy your book rather than be subject to a license agreement. There's been a lot of people who say, look, if I've paid all this money to Apple or Amazon to buy my books, but actually I'm just leasing a license, can I hand it over as an inheritance? And the answer is actually no, because you're really just licensing it for you as your user account. So finally, we can actually own our music, our video, and so on. So in terms of value generated, I suspect, again, financial contracts and music video, books, etc., will far outstrip in the revenue streams on NFTs than one-off art pieces. But of course, the headlines are going to be the one-off art pieces.
Yeah.
And they're valuable. Look, don't get me wrong. I think it's really an important aspect right now. But what I don't want to do is people get all excited about it, then people get less excited about NFTs as a result of the hype going down. But the real substance is kind of very much there, just maybe not necessarily on the one-off pieces, and much more on the mainstream kind of creative content.
Hype is often quite a vocal minority in a way, though, isn't it? Whereas if we're talking about investor research, they're not going to be making decisions based on one news article. There's going to be a lot of investment research there. One of the things that has come up in the past with regards to crypto, which I think started to die down a bit, but it was tarred with a bit of a bad brush in the past. There were questions over criminal activity or money laundering. So will there be any different or extra challenges the investors may face with NFTs? Or is that where Trustology comes in and actually mitigates some of the risk and concern?
Yeah, that's a good question. So first of all, look, it's really important to know that art, diamonds, anything valuable has been used as a money laundering tool for a very long time.
Very,
So
very
it's
true.
not it's not a new problem. I think what's new is just the ease with which you can transfer assets globally. And because it's so new, we haven't got the established controls. But to be honest, the last thing I would be doing is using blockchain if I'm a criminal, because literally the entire chain of transactions is recorded. Therefore, I would think twice if I was doing something illegal, because it's more a question of time rather than if there's going to be a discovery of illicit activity. Certainly, kind of guys like us, custodians, we are, registered with the FCA as a custodian wallet provider, which means we have to KYC our customers and we have to monitor transactions for compliance, are going to be an important component within this ecosystem. Because the blockchain gives you this beautiful anonymous or pseudo-anonymous recording layer. And that's great because you now have a really good record of stuff, which is really important for art as well. Even one-off art, as much as I talk about, books and other creative content being important, actually good record for physical or digital art is also important. It makes a huge difference in its value. So recording its transfers is really, really important. But of course, part of provenance is knowing the real identity behind a pseudonymous address. Now, there might be some famous pseudonymous addresses that nobody knows the legal entity behind, and they don't care. They care about that address. But a lot of the time, people care about the individual that owns something or the organization that owns something. At that point, actually, you still need somebody like us to be able to dereference the pseudonymous address to a real entity and confirm that it really was, I don't know, whoever, Vitalik Buterin, and that particular version of the white paper that he wrote, and it's or Satoshi.
Yep.
I think there is kind of a need for somebody to be able to authoritatively dereference pseudonymous identities associated with NFTs to actual legal entities that we all recognize, and also perform money laundering. But in all honesty, I think blockchain is going to provide a much better regime for compliance than any other previous system beforehand because of its excellent record-keeping mechanisms. So don't use it for money laundering. It's really, really bad idea.
Well, no, as you say, just the transparency aspect of who can see the records, and you have the validators as well, don't you, on the chain? So if something is untoward, let's say, I guess it wouldn't be as simple as just doing something a bit dodgy.
One thing that's important to know, though, for validators, they're not validating the kind of, from a money laundering perspective, all they're doing is validating that the correct signatures and the correct protocol has been followed. What we do as a regulated custodian is monitor for compliance. So validators won't help the compliance problem, but custodians like us absolutely do.
Okay. You obviously mentioned that NFTs have been around for some time, with CryptoKitties a couple of years back, and we're seeing this now with regards of digital art. What exactly is their future? And are they going to be a real integral part of financial services?
I think we kind of alluded to a lot of this, and my belief it will be, precisely because there's a real strong desire for people to own digital assets, whether it's music, video, books, art. There's also a real desire for people to make sure that there's a really good provenance of physical assets, one that's hard to disrupt. So I think there is definitely a business case there. And we've seen a number of successful kind of supply chain and provenance solutions out there that's been slowly gaining ground. And then again, I think you will see financial contracts being managed as NFTs, from bonds and so on to licensing and referral agreements. And the beauty of those things is that they all have addresses. So you can create an NFT, and the more people buy the NFT, it'll automatically pay out the royalties to the people participating in the NFT. So I think there's huge capability there, especially once we start to improve on the cost, the speed, and the bandwidth of the blockchain to really kind of strip out a lot of the costs and barriers and friction today in any of those kind of commercial movements, and then use those assets as collateral as well. Yeah, and there's a lot of collateral that's sitting there that could be used much more efficiently. And we're seeing how that can be done on blockchain far more quickly and cheaply than we've had anything else before. So I think that's also the amazing kind of thing about it.
I really wanted to ask you as well. You mentioned blockchain, and Ethereum, of course, is going through its ETH 2.0 rollout. I wonder, from your point of view and in the industry as well, how big a part Ethereum is going to play in the future of our lives.
Yeah, I think Ethereum is really important kind of protocol. I've been a fan ever since. I started looking at Bitcoin back in 2014. We saw the rise of colored coins. We saw a lot of altcoins. So colored coins allows you to create effectively an asset on top of Bitcoin. So kind of never really caught on because it was too hard to do and there was no programmability about that. Then we had the wide variety of altcoins, which kind of makes sense, but I think people often underestimate how difficult it is to gain network effect. And Ethereum was the first one to make it a lot easier to issue a brand new token without having to create the network effect and then build lending, borrowing, swapping, or trading kind of protocols that work with those assets. And that's been really amazing. It grew the network effect. So Ethereum has a massive amount of network effect. I think it's hard to break that. Right now, we're starting to see clones of that network effect. So Binance Chain has now got Binance Smart Chain, which is Ethereum compatible, but faster and lower fees. The counter side is the way they do that is potentially with slightly higher amount of centralization. So there's a bunch of trade-offs.
Yeah.
Then Ethereum itself is now starting to kind of speed up. We're now seeing some really good layer 2 solutions. One that seems to kind of having a lot of traction is Optimism. And then with Ethereum 2 coming on board and combining layer 2 solutions like Optimism with Ethereum 2 scaling, you're looking at about 100,000 transactions per second, which is pretty much fast enough for many use cases, including retail ones. So I think Ethereum has a really good shout. I think Bitcoin is an interesting asset class because it's almost become a reserve currency, but in terms of protocol innovation, it's just not capable of supporting DeFi. So what we're seeing is Bitcoin being wrapped on Ethereum and then being used in the DeFi protocols. And I think we're going to see more and more of that. Those wrapping capabilities kind of. But longer term, I suspect we'll end up with a small number of almost HTTP-like protocols that allow you to move assets. So, you project 10 to 15 years from now, we might end up with one protocol, whether it's Ethereum or not, because it's just so much cheaper to standardize on that. And maybe kind of layer 2 solutions providing specialization. So I wouldn't be surprised if that would be the kind of longer term outcome.
Yeah, well, I'm watching the world closely, but you're right within it. It must be exciting for all of you guys to be so deeply involved in it and in something that is young but really taking hold now.
Yeah, it's I think just the amount of opportunity out there right now to make a difference, because one of the things that I always liked is the slight rebel in me. I love the fact that blockchain gives you the opportunity to rebel, and that sounds really weird, kind of, but it's great to have electronic systems, but I also want to have always the opportunity that if the government gets it wrong, I want to be able to still transact pseudonymously. So people always go, hold on, aren't you creating a custody solution that's very regulated? And absolutely, I believe that good regulation is essential and needs to be there, and we need to support that. I just like the idea that you always have that backstop, just like you do with paper cash, that ultimately if something goes really wrong, you can have still a mechanism to exchange value globally without, over censorship. And I think that's an important aspect to that. I think, with so much of our lives getting digital, we need to have the guarantees of freedom that I think the crypto environment offers. So it's a mix of both. Pseudonymity where it makes sense, with a layer on top that's kind of regulated like us to support use cases where that's the right thing to do. But that choice is super important.
Yeah, freedom, transparency, and there's always discussions over data privacy, aren't there? And the blockchain just enables you to see where your data is going and gain more control over it.
Yeah. So I think it's to me, that's the real exciting thing. And then just seeing people being able to, create financial products that weren't possible due to their cost before. Yeah. We're seeing the successful funds running at 10 to 20 million in traditional finance. You have to have a minimum of 100 million to make a living out of it. And this will change over time, but the cost reduction is really democratizing access to a lot more people.
Perfect. Well, you mentioned keep an eye on the next 10 to 15 years. There'll be a lot of innovations, but exciting time ahead. And for you guys as well at Trustology, a very busy and fruitful future, no doubt.
Yeah, looking forward to it, and thank you for your time.
Well, cheers. Look, thank you so much. I really hope we've been insightful to people wanting to learn a bit more about NFTs for some of your potential clients as well. And yeah, this is hopefully a bit of a good gateway for people. So cheers for your time and education there.
Thank you. Pleasure.
Thank you for joining us on the Tech Stack today. Don't forget, you can listen back to any of our previous episodes wherever you get your podcasts. And if you'd like to learn more about us, just head to techfellow.co.uk.